News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on Iran. President Trump has signed the interim deal to end the war and reopen the Strait of Hormuz. The president insists the agreement will ensure Iran never obtains a nuclear weapon, but he's suggesting Tehran should still have the right to enrich uranium for electricity, access its frozen funds, and develop ballistic missiles.
If other countries have them, it's a little bit unfair for them not to have some. A ballistic missile is not the same thing as what we're talking about when we talk nuclear. But if Saudi Arabia and Qatar and they all have some, I would say in relative proportion, I think it's okay.
Speaking at the G7 summit in remarks heard live on Bloomberg Radio, President Trump also defended the $300 billion development program that's included in the agreement.
We have their money. We have taken their money. It's not our money. It's their money. And we froze it. At a certain point in time, I guess we're going to have to give it back. You know, if we didn't give it back, nobody would ever invest in the dollar again.
And despite President Trump's assurances, it is unclear whether Iran has begun taking steps to fully reopen the Strait of Hormuz.
Well, Nathan, Bloomberg Middle East correspondent Abir Abu Omar says the interim deal opens the door to 60 days of negotiations.
Mainly about the nuclear program, mainly about Iran's ability to get a hold of those frozen assets if it falls apart and the concessions are not met. President Trump did threaten military strikes could go back again if he doesn't like the situation.
Bloomberg's Abir Abu Omar reporting from Dubai. Details of the deal have prompted criticism from President Trump's fellow Republicans. His first-term Vice President Mike Pence tells Bloomberg government the agreement falls short of verifiably dismantling Iran's nuclear weapons program. The National Iranian-American Council, meanwhile, is cheering the deal, saying the measures in the agreement should not be read as concessions. President Trump is firing back at critics on Truth Social this morning, saying, quote, "Fools who think he hasn't been tough enough on Iran are either jealous, bad, or stupid."
Well, Karen, following news of the deal, gas prices have fallen below $4 a gallon for the first time since March. AAA's nationwide average for regular unleaded is now $3.99.9. Crude continues to tumble as well. West Texas Intermediate's down 2.6% on the session, trading just shy of $75 a barrel. Brent's below $78 for a drop of 2.2%. Katie Kaminsky's chief research strategist at Alpha Simplex, she says the downward pressure on oil makes sense, but carries some risks.
The hopes that things just open and then everything's going to be fine, maybe a little bit optimistic. And I think that's a worry that we do see because you still see some long signals in energies. But I think it's really going to depend on how that proceeds in the next week or so. And so I think if the energy shock ended or will be ending, that's very positive for markets.
Katie Kaminsky at Alpha Simplex says oil's move is a positive sign for risk assets, the Fed, and inflation.
There are more moves in geopolitics this morning, Nathan. Defense Secretary Pete Hegseth has announced a review of U.S. military assets in Europe.
I'm announcing today a 6-month Department of War review that will examine America's force posture and basing in Europe, and stepping up to make sure that our access, basing, and overflight are clearly delineated and assured.
Defense Secretary Pete Hegseth spoke at a NATO meeting in Brussels. He says the review will be designed to ensure Europe steps up to take primary responsibility for its own defense.
Well, Karen, let's turn now to the Fed and its historic first meeting under new chair Kevin Warsh. Policymakers voted unanimously to leave interest rates unchanged. Warsh made clear the central bank will not tolerate high inflation.
Persistently high prices are a burden for the American people, but the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
Fed Chair Kevin Warsh also announced a number of new task forces, including one focused on the central bank's $6.7 trillion balance sheet. One thing Warsh didn't do is submit an interest rate path projection, signaling changes ahead for forward guidance.
Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in.
Chairman Warsh also says he'll have Fed staff and outside experts review the central bank's forward guidance and communication practices, including the dot plot.
Well, Kevin Warsh's comments, Nathan, they sparked a sell-off in short-term treasuries and a pile into bets the Fed will raise interest rates as soon as next month. J.P. Morgan Asset Management fixed income CIO Bob Michael says it was a hawkish tilt.
It is a hawkish tilt from the committee. Half of the committee is expecting rate hikes this year, which is, I think, a real shot across the bow to the market. We were thinking 2, maybe 3 to be decorative. We didn't think half the committee. It's something quite different.
And J.P. Morgan's Bob Michael says a rate hike this year is certainly possible, given inflationary pressures from AI spending and the Iran war. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.